you have the BSP pulling the trigger on that 50 bp hike. Are we done here? You have the Fed hinting at more hikes. Does that mean we're likely not done tightening just yet? And if we have to, just how much space do we have left?
Hi, good morning. Regarding the recent hike of the Bangko Sentral ng Pilipinas, because we are seeing that inflation would still continue to rise, especially that the Philippines would be entering the holiday season or the Christmas, demand would be increasing, pressuring more increases in inflation, which would warrant the unexpected further hikes by the Bangko Sentral ng Pilipinas in the succeeding months. But maybe the runway would be from 25 basis points to 50 basis points just to manage the interest rate differential between the Philippines and the United States.
Okay, so you see 25 to 50 for the rest of the year. Do you see that extending all the way to 2023, or that for you is the end of the line, when it comes to hiking rates?
Well, it would depend on the movements of the federal bank in the United States, depending on how much more they would be adjusting their interest rates and how would the Philippine economy respond to the recent rate hikes that the BSP has implemented.
Now, like what we were reporting about earlier, again, that 50 bp hike, how soon before you actually feel the effects of this latest hike in anchoring inflation, or price pressures already too deeply entrenched?
Well, based on data, the fastest time for us to feel the effects of these rate hikes would be in a month or two. It would give time for our demand side and supply side to adjust with these recent rate hikes in moving their investment opportunities, in adjusting the supply chain, and so on.
Okay, so a month or two, given that, you expect somehow inflation, or at least price pressures, to somehow be tempered in the near term? Or how exactly are you picturing inflation at least moving towards by year end?
So the rate hike would definitely temper inflation. But looking at the demand side, since the Christmas holiday is fast approaching, demand is actually increasing. There is this bottleneck between the supply side and the demand side in influencing inflation. But if the Christmas holidays would prove to be a very powerful factor that would influence prices, then it might erase the impacts of the rate hike.
Do you have any projections exactly here as to how we are going to end the year here when it comes to inflation?
Well, for inflation, I would have to agree with the central bank that we might be ending the year with at around the average annual inflation rate would be at 4 to 4.5%.
How about for 2023?
For 2023, while inflation would have the tendency to remain elevated, but given the effects, the lagged effects of the recent rate hikes, we might be able to see a stabilizing inflation rate, but still elevated for the first quarter of 2023.
Okay. Again, of course, when we're talking about tightening here, policy tightening here from the central bank, we also have to take into consideration, of course, just how fast the economy is growing. Are we growing fast enough to actually absorb all this tightening?
Well, we are definitely growing, but it would be a matter of how fast the economy can grow relative to how fast we are hiking the rate. But at the rate that we are going, at the rate at which the BSP is going, I think the recent rate hikes is enough for us to be able to manage growth, to be able to absorb that growth, the growth of prices. It is enough. It may be enough, but we'll see on how external factors would play in influencing our macroeconomic variables.